Hey, what's up, everybody? Professor Keith back here again. I want to give you guys another little video here on an indicator that's worldwide used that I haven't covered yet, that I probably should have already covered, but we can add it into the indicators as usual and get ourselves our best trading system possible. These are going to be moving averages. Now, I use moving averages all the time pretty much. Sometimes I take them off, but for the most part, I always leave them on. Moving averages are a very important indicator, and they're used worldwide, all right? And I mean worldwide, from every stock, every bond, every money market, every mutual fund, every cryptocurrency. Moving averages are a very powerful tool. I want to go over what the moving averages are, how you can find them, etc. And we'll start right now. So first thing is, you see on my screen here, I've got just candles right now, and you see these lines here, all right? These are the moving averages that I use, all right? So I'm going to go into the indicators. You can see the one I have. These are all the indicators that I have that I use from time to time. I bounce around, I use some, I don't use some, I change them up, whatever. I've went over in the TradingView 101 class about how to set up multiple different setups so you can save them all, and you can save templates, and all you gotta do is click on the template and it'll pull up whichever template you've got saved, all right? So the moving average is one I got here right at the top, 50, 100, 200, 350. Now you can use different ones if you'd like, but they need to be moving averages or simple moving averages and not exponential ones. Exponentials are EMA. Moving averages are SMA or MA. One of the two. Doesn't really matter. But for the purposes of showing here, I'll type in 50, comma. Oh, didn't do it right. 50, comma. 100, comma. And you see I got other ones up here. I got SMA, 10, 50, 100, 200. You can use different ones if you like. You got one down here. It's 50, 100, 200. Either way, right there's the one I use, 50, 100, 200. I've got a star beside it. Once you find the one you like, hit a favorite so it saves into your list, okay? When you get it, this is what you'll see pulled up. I'm going to turn the candles off here just so you can see a little better. All right. I've got the plot pulled up here. There we go. Okay. And now, we just have moving averages up there. Now, what are these moving averages? All right, a little bit of math here, but it's not very complicated. The yellow line that you see is 50 days averaged together in a nice, smooth, gradual line here. Okay, that's the 50 moving average. The blue line you see is the 100 moving average, or the 100-day average price, put into a line and made nice and smooth. Red is the 200, and the orange is the 350, all right? 350 is not really used as much. It's really about the 50, 100, and 200. I just throw the 350 in there for an extra one, okay? So for focusing on the 50, 100, and 200, let's just pay attention to those for now. I'll actually pull the 350 off so you can see it. There you go. So you can change these colors if you'd like, but I'm going to tell you the standard is yellow, blue, red, 50, 100, 200. So I kind of keep mine standard just because that's how I learned. It's up to you to change them if you'd like. But let's go over what the moving averages help us do. So essentially, the moving averages are your first markers on the chart. All right, they're your first place where candles are tended to go. They want to aim for the moving averages more often than not. We can look at this back in history and see that the price kind of sticks around the moving averages 9 times out of 10, okay? And if you can get anything 9 times out of 10, that's great, because that's 90%. And if you're winning at 90%, you're elite, all right? We're not aiming for 90%. We're aiming to get somewhere between 65 and 75. And at that rate, if that win rate, we'd make a ton of money, all right? So let's get into the moving averages and what they are. You see them here. I'm going to put the candles back up so we can see what was happening. Now that you got the candles up, you see that because earlier all you saw was the moving averages, again, that's all you saw, and we put the candles back up there, you see that the price tends to hang out with them. You can also see that more often the price is near the yellow one, a little bit less often it's near the blue one, and far less often it's near the red one. All right, so a good rule of thumb I like to use in the moving averages is they act like magnets, okay? The price gets away, you can tend to believe that that magnet will draw the price back to it little by little, and that price will come back to that moving average at some point and touch it again, okay? Doesn't happen always, but it happens an awful lot, all right? Price action does what it does, and we have other indicators that you can go through on the list and see how to better find where our in and out points are and which direction it's going to go. But the moving averages are kind of the first one you need. All right. Now, to show you what I mean, I'm going to roll over a little bit here to a nice flatter area where you can kind of see. So, an important lesson to learn about the moving averages, like I said, not only do they often stick near the price, but they often act as start and stop areas. More often than not, they do that. So when the price is over the line or over the moving averages, they tend to act as support, meaning that they will hold the price over it. All right. When they're under, they tend to act like resistance, or they will get stuck. The price will get stuck underneath them. Now, just like I said that the 50 and the 100 are a little bit more often hit than the 200, now that's inverse for the strength of the lines. The 50 and the 100 will also get crossed more often than the 200 will. That red line is a strong barrier on the chart. I like to think of it as the strongest magnet. All right. Each side of that line has a strong magnet on it. The top is a strong magnet and the bottom is a strong magnet. When you're under it, you're kind of stuck under it until you can pull away from it. Okay, you really got to pull hard on a magnet to get it to come apart sometimes. And when you're over it, you're sitting on top, it's kind of hard to get it to push together. Like if you flip those poles around and went north to north, it's kind of hard to push them together. So think of that whenever you're looking at the moving averages. Okay, when you're over them, they tend to act as support. When you're under them, they tend to act as resistance. The 200, the red one, is the strongest. The 50 is a little stronger. And I'm sorry, the 100 is a little stronger, and the 50 is the least strongest, but the most often hit. All right, and you can use these moving averages to see, where your price is going to go in general. You can see it. Look, I'll even show you here. We'll circle an area right here. We see that a lot of price bouncing around happened right here at this 200 moving average, didn't it? You see that multiple days were spent attempting to cross this 200. It finally crossed it. And then once it crossed it, it spent multiple days bouncing on the top of it, trying to pull away. It actually pulled away a little bit right here and got stuck back down, didn't it? It went under, but it had some extra support under there. That 100 moving average was under there and kind of helped to give it a little boost and get it moving. And it got up and over, okay? It tried for a while. It bounced and bounced and bounced and boom, went right back down below it again because it couldn't hang out any longer. And then it was stuck under multiple days trying to get back up over this line, and it couldn't quite do it. Again, a strong magnet. Now, let me erase this circle here so we can get back to looking at some other stuff. I want to go over some different terminology you're using when you're looking at moving averages. There's a few different crossings that happen and a few different small patterns here that can help you predict the price action. All right. First off, we'll go over what a golden cross is. All right. A golden cross on these moving averages. Again, we're using these moving averages as our advantage. Okay. A golden cross is when the 50 moving average, or the yellow, crosses upward through the 200 moving average. Okay. And that happened right here. We'll get our arrow tool out right here. Right at this moment, that 50 moving average crossed upward through the 200. That's a golden cross. That's a typical buy sign. Okay, we'll go over why this didn't go up quite yet in a second. This is a typical buy sign. When you see the 50 moving average cross the 200 moving average, the yellow crossing the red, that's a buy sign. Now, inversely, when we have the 50 crossing downward through the 200 downward, this is a death cross, and I don't need to explain to you that don't sound good, does it? A death cross, meaning that's a typical sell point. All right? Those are important, and I want you to understand that in those, you're looking for a more long-term buy or a more long-term sell. All right? That doesn't always mean it's going to happen, and moving averages are only one indicator, so don't worry to get hung up on just one indicator and think that that's the only way it works, okay? I leave them up here a lot because they act as resistance and support, which you're going to see in other videos. But they're important for that reason. So price action follows these lines all the time. And I want you to know that. So these are just little tips inside the golden cross and death cross. So just little indicators inside of the overall indicator. All right. Now, given that we had a golden cross, What does that mean? That means that that was a buy sign. The price fell dramatically. Okay, that should have been a buy sign, but it wasn't. So that's called a soft cross. And what is a soft cross? A soft cross is when the price doesn't react upward on a golden cross. Right here. So this line, which was nice, became a soft cross. Now, same thing happened again here. Another soft cross. We had a nice, smooth, easy, gentle fall right through this price. Now, if this was a really bad death cross, this price would have plummeted way farther. Okay? It would have just kept on going and would have never stopped, most likely. And would have went way down farther. But it was a soft cross. A soft cross. So it didn't cross with authority. It immediately popped back over. That's a sign of rejection, price-wise. You can get into other videos and you'll see that what I'm talking about. But for example's sake, let's continue to move on, okay? Now, right here, we had yet another golden cross, didn't we? And this time what happened? As our price went up and started to flatten out and move over, the lines finally crossed right here. We had a slight downward move, and you're going to see in another video that we explain what this move is called. And it's really helpful. When you see that other video, you'll understand it. We call that a tits move. And you'll see why we call it that, because the price action tends to react when these lines cross. But we had a golden cross right here. The price moved sideways or down. And it kind of waited for another cross right here between the 50 and the 100. Now, there's no special news about that crossing happening other than the price action tends to bounce around a little bit or come down some toward the crossing. But you'll see that in the other video. Either way, we didn't get that downward drop like we did over here. Okay? We didn't get that at all. We got a nice, smooth push up. Now, that's a great golden cross. This was a wonderful buy sign, wasn't it? You bought here when this golden cross happened, and up it went. All right, very good. So that's the kind of things we're looking for. Now, again, here we go again for a whole nother round. So we had another death cross right here. And instead of having that nasty fall, what did we get? We got another soft cross or a weak cross. And bam, the price action popped right back over. We got another golden cross, and up she went again. Okay, again, the moving averages have worked in your favor. Now, how hard is this? This is a 1 hour chart. Okay, I've rarely ever trade 1 hour charts. I just wanted to give you this as an example so I'd have plenty of crossing and diving of happening so I could give you some good examples, because on a daily chart, this happens far, far less. Okay, far, far less. All right, now that I've explained the golden cross and the daily cross, I want to go over a couple little patterns you'll see. There we go. So, when these moving averages separate away from each other farther than they normally do, you'll see quite often these moving averages stay tight together, don't they? They tight together, they're tight together. They're crossing each other, they're zigzagging, you know what I mean? That's typical price action. But occasionally, they space out very far. See this space? Look how much room there is in between those moving averages. When you see this, you can start to predict sideways or down movement, because these moving averages got so far away that, again, they're all magnets. They will eventually suck it back into themselves and get close together again. And what happened? Right down here, they did it again, didn't they? All of them bundled up again. All right, that's a one sign for you across all time frames. Doesn't matter that price action may change. Now, inversely, I just showed you that when the moving averages get wide like this, the price tends to slow down or move sideways. It's the exact opposite when these moving averages are really tight and bundled up, okay? When they're tight and bundled up, look what we got. Upward movement, okay? Beautiful, beautiful upward movement after these moving averages got all tight and balled up and twisted. Okay, that's just a simple thing for you to look for and use to your advantage. Now, it's up to you to figure out whether these tight moving averages all balled up are going to go up or down. Okay, it's up to you to figure that out, but I just wanted to give an example. Now, another one. So I'm going to switch to daily chart for this next one because it's a little easier to explain on a daily chart. But it's pretty neat. So let's go back a little bit here so we can get a nice smooth play on what we saw. We may have to go to a weekly chart. It might be easier on a weekly. Let's do that. There we go. Oh yeah. Okay. So a smooth, simple pattern that a lot of traders look for is when the moving averages all flatten out. Okay, when they all flatten out, price action tends to ensue. And it's not a very good chart still to make this example. Let me find a better. I know XRP has a good looking flat chart to use as example, so I'll pull that up real quick. And whatever we got here we'll erase. There we go. And it still doesn't have very useful chart for us. Let's see if we can find our. Here we go. There we go. Now some moving averages. How about we do 3-day to get some good data on here? Nice smooth moving averages. There we go. When we see these moving averages get flat and smooth like this, price action tends to happen. Okay, when they're flat and they start to bundle up, as I said a minute ago. First, they have to flatten out, though. And as you're seeing right now, these moving averages are getting awful flat. This tends to react one way or the other. Now, that doesn't mean it's going up. That could very well mean it's going down. But the point is, price action is about to happen. Now, we see these flat moving averages. Well, what do they mean? A good sign is to wait on them to get in order. And by order, I mean the 200 on top, the 100 in the middle, and the 50 on the bottom. Red, blue, yellow in that order, okay? So you would have red on top. And then you would have blue in the middle. And then you would have yellow on the bottom. Okay, that's perfectly in order for the good price action that we like to see, okay? You're going to see this on all time frames, so just be prepared for it. And when you see it, you'll know it. Now, again, you don't know which necessarily direction the price is going to go. Are you over the moving averages or are you under them? If you're under them, well, then you're leaning toward down. And if you're over them, you're leaning toward up. That's when we look at our other indicators and we get some better ideas on what the price action may do. Anyways, that's not the point. The point is just to show you that the moving averages are effective and useful tool to help you find the trends, chart out what may happen, see the price action. Are my moving averages far apart? Okay, well, the price is probably going to slow down a little bit. Are they very close together? Yeah, they are. I bet we're going to get some price action soon. That's all you're using them for. You're using them for that and using them for your barriers. Are we going to hit the 200? I don't know. Are we? Bam, look at that. We hit that 200 clearly and dropped hard. Well, now what are we going to do? Well, we crossed the 50, but look, man, we hit the 100, we hit the 50, we hit the 50, bouncing off of them over and over and over again, can't get past them. Every time that happens, it keeps dropping, it finally gets over, and then look, it gets stuck and can't go past it. And what happens? Back down underneath it again. And now here we go with this magnet underneath again, bouncing around, not doing much. So we're going to see what happens here. It's my belief that we're going to see these moving averages flatten out a little bit more. We're going to get a little bit more down. And once we finish off this next down, we might get some price action up, but not until then, okay? So doesn't really matter. It's just showing you about the moving averages. I hope this video was helpful. I try to keep under 20 minutes now for all these instructional videos so that people don't get bored watching them, because I know sometimes this stuff is a little bit boring. And I'm sorry, but sometimes you got to take it as you get it. And in order to get good at this, you have to practice, and you have to be willing to put in the hours. You know, I put in almost 12 hours a day doing this, plus a regular job. I'm in my regular job work shirt right now. Okay, so regular job plus this. I don't stop. I never stop. Anyways, I appreciate everybody watching. We'll get this video shot up on YouTube. Thank you, guys. If you haven't signed up for the giveaway, please go sign up for the giveaway. It's another video. This won't be up forever, though. So once this giveaway's over, it's on y'all now. So anyways, I'll see you guys on the live streams twice a week. Continue watching your instructional videos. Till you guys, see you next time. Peace.